Okay, let's get right into the stock market technical analysis. Gonna get this one out a little bit early today. I'm seeing a couple things in the charts I want to point out so everyone's well prepared. All right, if you guys are finding value in the content and finding trade ideas, hopefully profitable ones, drop me a thumbs up. Again, if you're interested in learning this as a skill set, check out my technical analysis course, link in the description below. Finally, if you want to join the private member group, $5 a month. I'm giving out additional trade ideas, market insights, really all the thoughts that I have that go into these videos. The private member group hears about them first, usually several hours ahead of time. So $5 a month if you're interested, link in the description on that one. All right, so yesterday I talked about how I stopped out of I covered my short, my Q short, and that's again because we had that negative divergence on the Nasdaq futures that was burned through. So I thought, okay, we were likely going to go up and make a new high, a new divergent high on the daily chart. Let me flip over to the daily. That would set us up for a move up to about 311.50-ish, somewhere right in there. Okay, so here's my thoughts. I think that is still completely possible. We could easily get up there. I would be looking to take on a short position up there. That's very objective for a short position, especially if you have the negative divergence, which we would. I'm not exactly sure if we're going to get it after what I'm seeing today. So completely possible. If you see it or if I see it, I wouldn't be surprised. Here's the hourly chart. We've got this uptrend line right here. So maybe we're going to dip down and hit this and then bounce up and put in that divergent high. That's completely possible. I don't know if it's going to do that or not. One thing I am seeing though on the Nasdaq futures, when I flip over to that and I look at the daily chart, you'll see here that we basically did put in a divergent high on the futures. So here is the former high really closing right around in there, about 12.844, and today we came to 12.808, close enough to where we could call that a divergent high. Clear negative momentum, and you can see the RSI starting to turn down there. So clear negative momentum. We got close enough. I would say that was basically an equal high to that, and that's negative divergence on the daily. That might be all she wrote. All right, we might start to sell down from here, and then the other reason why I'm looking at the potential for the selling really to start, from about here, these Fang stocks. Okay, these Fang stocks, Amazon, we're looking at a daily chart on these. Resistance still slightly above, 102.87. So yeah, we could push up a little bit more for sure. Maybe that's that energy that the triple Qs needs to push up to that final divergent high. Because again, we had the divergence on the daily chart on the Nasdaq futures, but not on the ETF, the triple Qs. So could be a little bit of play there, and maybe that's Amazon pushing up to this 102.75 area. Google ran right today, right into major resistance. All right, so we're getting, it's just a lot of resistance. I really think that there should be some selling coming in on Google right in this area. Apple right here, pushing into resistance right there at about 157.33, and also making a divergent high. So negative divergence on the daily chart on Apple, as well as pretty much pushing right into that resistance. So that's a bearish setup. It's negative, and there should be some downside pressure. If not soon, if not today, soon, probably next week. Meta pushing to some resistance right here. Meta, the resistance isn't super strong. I see a couple reactions right through here. It's not a super big key level, about 202.55, but it is a new high. You can see we're trending up, and it's a divergent high. It's the first high that we've had that is negative divergence there on Meta. So that's bearish. Tells me that a reversal is likely soon. Microsoft, again, pushing up and making a new high, pushing into resistance right there at 282.93. So yeah, that is, that's decent resistance. If I roll out on the daily, you can see Microsoft, we've had a lot of reactions on that key level there. And so, yeah, it's decent resistance right there. And you can see so far the market's treating it as such. They rejected it when it first tagged it. Also, this high right here is a divergent high on the daily chart. So this is the first time we've had negative divergence here on this daily chart for a while. This is signaling that we're, likely coming to the end of the trend, and we're about to have a major trend reversal on the daily chart. Okay, and then there's Google, the other shares of Alphabet, and pushing into resistance in the 200-day right there. So we've got most of the things are at or near major resistance. Several of the things have negative divergence on the daily. The Fangs are what make up the triple Qs, and so I'm just seeing a lot of potential selling pressure in the near future. Rolling back to the Qs, yes, we could have that final little leg up, and maybe that comes today. If we're going to get it, it's probably going to come today or potentially Monday, and then I would look for a reversal if we don't get it today. Okay, gold. So here's gold futures. I did notice something. Gold futures, you've got a bearish rising wedge. I've got it marked out here. There's your bearish rising wedge in the futures. We also have negative divergence on the hourly. So I'm seeing like a potential for a pullback here. Probably, if we're going to break this bearish rising wedge, I could see us pulling back to about this 1900 area of the level of support. So that's kind of what I got right now. From where it's at, we're at resistance right now, so it's objective to short. This is the futures, but it's objective here, and that's a potential pullback of about 3% or so. Maybe there's a little more if we're another level of support's down here at 1880. I don't think we go much beyond that, but that would be, 3% down to a potential 4% or so for a pullback. So that looks like it is, close to pulling back. And then Newmont, which is the largest miner, you see here on the daily chart, running into the 200-day moving average, up about 5%. So this has been good. I think we're going to get a pullback here once we hit that 200. Probably going to pull back to some support levels. So something to look at there. Also GDX, the miners, running into some resistance right here at about 30.10. You can see I've got lots of reactions there. It was support right through there, and if I kind of roll out, you can see support through here. Had a cluster right there. That's a key pivot level. We're kind of overshooting it right now. I suspect they sell into this and it pulls back. All right, minimal pullback. We also have this bearish rising wedge here, so I don't know. I think we could easily pull back to about 2850 or so. That's probably about as far as I'd be willing to let that one go, is right there. So potentially from where we're at, a drop of about 5-6%, and then continuing to the upside after that. Commodities, wheat. This is wheat here. We were popping above this area of resistance today, but they sold it back down. So still can't quite get going. You can see this is former support, and it could be resistance. We broke down. We're rallying. We're not able to break out back above. I think we're going to get it, but we just don't have that quite yet. One of the things that tells me we're going to move to the upside is the big divergence on the daily chart. All right, big bullish divergence here on the daily tells me that we have a higher probability to pop this and start running to the upside than we do to continue to break down. But obviously we could just continue to build on this divergence and put in a new low. So that's what I have on wheat. Still bullish on it, and I'm still long. JP Morgan selling down. Back down to the 200-day moving average, so it's been testing the 200 for the last few days. Still above it. A break below that is probably going to be pretty bearish, and that would set JP Morgan up for a move, likely all the way down to this 105 area. Big support down there, so keep an eye on that. If you see that, that's obviously going to be bearish for the market. ExxonMobil. This one's heading back down to support about 98.66. The one reason why I don't like it as much as a short, because it definitely has a good short setup. The chart tells me it's a short. Look, negative divergence on the daily. You've got a nice clean uptrend line. We broke trend for sure. So I mean, you could take the trade. I don't think there's any harm in taking it from my perspective. In my opinion, it looks like a decent short setup. Oil futures, though, they're sitting at support. They're just starting to break right now, but I've got some support right here on oil at about 66, 65 or so. And yeah, they're breaking right there, just starting to, but we'll see how that closes the day. LLY healthcare, you can see, you know, today just getting rejected again off the 200 right there and resistance. So again, it's objective to short right here. Whether it works out or not, who knows, but it's objective, and I'm looking for the next leg lower. Really on LLY, I'd be looking for to take out the lows, heading down to the next level of support. Anywhere from here, which I think there's some support right there, 301 down to about 285. Good support there at 285-ish. So that's where I'm looking at on that one. And then Merck, haven't covered that one for a while. Selling down today. Merck kind of likes to, what I've kind of noticed is it makes a big candle and then it kind of backfills it. And then makes a big candle and then backfills it. So definitely, you know, starting to kind of work its way lower. People don't quite realize that this thing's downtrending, but it is downtrending. You've got a high, a lower high, you've got a low. We need to take out this low right here, 102.75, and it should be a pretty swift move right down to the 200-day moving average of 98. So that is still my objective target. I like it. I'm still short this one. And to wrap up, we'll watch these financials. The bank stocks are getting obliterated today. Starting to break the trend line or this horizontal support on XLF about 31.25. You can see kind of reactions through here, but mostly if you roll back, there's a reaction and then big reaction right there. That's your pre-COVID highs. So we start to break that, and we're, you know, and it's not looking good for the market. And believe me, if these keep heading lower, tech is going to eventually sell off. You know, so I think that's where the opportunity lies, because the financials have already sold off pretty strong. You know, they've pretty much dropped from the highs down to the lows about 13.5%, while tech has been rallying. And so if we're going to continue to see the financials sell off, tech has a long ways, I think, to catch up. At minimum, probably down to this level, but I think there's potential to make that next leg lower. So whether we make the new divergent higher or not, you know, the market's been kind of playing games and kind of dangling that in front of us for a while. Thought we were going to do it here. Didn't. Looks like we're going to do it here. I don't know if we do or not. If we do, we get that divergent high. It's objective to short. So that's about the best I can do right now is, and you know, one way to play it, if you're unsure, you know, I have to take a position, you know, I have to believe that it's going to go down. We'll have negative divergence if we run up there. So a starter position maybe makes sense, and then add to it if you get that divergent high, or hold out for the divergence. It's just when something's so clean and clear, maybe the market doesn't give it to us. So that's kind of what I'm thinking. Okay, I'll wrap up here and get the video out. Catch you on the next one.